Record day for the NASDAQ, the tech-heavy index closing at a new high as investors wait on earnings from some of the biggest names in the industry. But our next guest says the event shaping markets the most recently is the election. And joining us now is Tim Chubb, Girard Chief Investment Officer. Tim, we'll get to the election, but first of all, we do have big tech on deck. Alphabet's about to report. Tim, I'm curious, so far during this earnings season, give me your take. What have been your big takeaways?
Yeah, sure. And thanks for having me. I'd say more than anything else, feeling about just really lukewarm. We had seen, a number of earnings revisions, coming into this season, particularly with a lot of the consumer companies that have seen pricing softness as consumer tastes and preferences have definitely changed as a result of, just the high level of prices and inflation that we've been combating with for the last several years. And so overall, I'd say, so far so good. But it was a lower bar coming into earnings season. And to your point, I think it's going to be all eyes on the Magnificent Seven. As we kind of get into next year, last quarter, we saw a lot of scrutiny related to just what that incremental AI revenue may look like and kind of what the glide path may ultimately mean for some of these companies who have been investing so heavily in their AI transition over the better part of the last 2 years. And so, headed into 2025, looking at some of these earnings growth estimates, I think overall, they're relatively overstated, just given how much of a deceleration that we're actually going to see in capex related to AI, moving from sort of that 40 to 60% range in 2024 down to that 10 to 30% range, which has been a huge driver for not just expectations for last year, but earnings growth this past year.
And so, Tim, put it all together for us. What are you doing strategically right now?
Yeah, gosh, right now we're really have taken the last couple months and repositioned our portfolios, kind of shifting into neutral. I think there's large sort of when we have an election that's as divided and controversial as we're currently I guess going about to experience next week. I think it's important just to take a step back. Focus on the fundamentals, be selective. I mean, this has definitely been a great quarter from a stock picker standpoint, given the beats that we've seen have been rewarded really favorably, more so than prior quarters. And so we're relatively neutral, across our equity strategy, really focused on, sort of balancing some of the underappreciated cyclicals, like, banks and financials potentially, which certainly have, seen a run up here in anticipation and repricing that we've seen. From a sort of a divided government and a Harris win to now a non-zero probability of, certainly going to be, a little bit more of a different composition within Congress and potentially within the White House as well. And within fixed income, it's largely taking profits. I think corporate balance sheets are, really in great shape. But as top line slows and we start to see sort of the refinancing environment that we've been in, a lot of these companies have had debt that's set to mature in the next year or two, or in some cases just recently. And that's ultimately going to put pressure on profit margins as well. So it's a little bit of a double-edged sword for small caps.